welcome to Investing Rules. On today's program, we're going to be talking about Diageo, which is one of the world's leading alcoholic beverage manufacturers, and it's the number one manufacturer of spirits, in fact. So you can get a sense of what this company is manufacturing from their website, which I will just give you a quick tour through. So we've got a few brands here. We've got Johnnie Walker, Guinness, Tanqueray, Baileys. These are all actually instantly recognizable in various different markets across the world. And of course, alcohol is pretty uniform, internationally speaking. So I think it's quite important now to look at the price. Now, as value investors, obviously the price is not really an indication to us of how much the company is really worth, but obviously, naturally, as the market price, it is giving us an impression of what people think about the company at the moment. And if you look at the price progression for Diageo over the past few years, it's been very negative. We've seen the price fall from almost 4,000. I'm going to be using the UK price for the moment, but that's pretty uniform on the New York Stock Exchange as well. It's fallen from 4,000 pence down to 25 pence approximately. So we can see that it's had a pretty precipitous decline, and for a company that's pretty well known for having high quality brands, that is quite concerning. But obviously, as value investors, maybe that's also an opportunity, a signal that this is a high quality company which is now available to us at an attractive price. Now, another thing to look at here is that it's got a dividend. Obviously, as that price goes down, that dividend yield is going to go up. So this is quite an attractive stock for dividend investors if you are of the view that this is a company with good long-term prospects. Now, if we look at the long-term perspective here, we can see that it's a company which has compounded wealth over time. And this is just obviously the price view. This is not a total return view. So the dividends are not included in the consideration for this graph. And actually, you can get a quite nice sense of the company just by looking at the Wikipedia page. But I think the most important thing you can take away from this page is that, of course, this is traded both on the New York Stock Exchange and in London. And it is a British company. It is headquartered in London. And it was formed 26 years ago, basically as a merger of lots of other different alcohol manufacturers. So that's an interesting point. UK companies are seen as a bit undervalued at the moment. And this may be, therefore, an opportunity to get into a high quality company at an affordable price, but I'll be talking about whether the price is actually that attractive a bit later in this video. Now, what's quite clear to me in the alcohol business, of course, is that this is a really slow growing business. So that would suggest to me that maybe this business is not quite as attractive as it might initially appear. This is a presentation from Diageo, and you can say that it's showing you here that international spirits, which is the industry which Diageo is mainly in, is only growing by about 5% annually. That's internationally speaking. So pretty underwhelming. It's barely keeping up with inflation, really. And you'd need this company to be heavily underpriced to justify investing in an industry which is so slow growing, from my point of view. So I think that brings us on to naturally analysing how much this company is actually making, annually speaking. And if we have a look at this, we can see that the revenues for Diageo, this is in pounds, but you can also see a very similar pattern in dollars. And of course, it's an international business, so it's taking in money from all around the world. It doesn't really matter which currency you do it in. The story is pretty similar. You can see that in 2014, the company had revenues of about 17 billion, and it's now got revenues of 21 billion. In 10 years, to have only grown your revenues to that degree is pretty underwhelming. A similar sort of picture with the operating income. We've got 5 billion in 2014, and now we've only got 6 billion, 6.4 billion now. So 5.3 billion to 6.4 billion. It's a really underwhelming story of growth, which is why I would be rather cautious about this decline in the stock price, because you are actually buying a company which is not actually able to grow its revenues quickly or reduce its costs in order to also grow its income and the earnings that are going to go to you as the shareholder quickly enough either. I would probably be much more encouraged by a sort of technology stock or something like that, which was growing at a much higher rate, because these are companies which will grow your earnings and compound your earnings and build wealth for you. Whereas these sort of consumer companies, especially in a very slow growing industry, are a bit more challenging for me. So that would be my advice for you. Now, one other thing I'd just like to pick up on here is that the Diageo is very similar to a lot of really big companies in that they're so massive they almost become difficult to manage, and the incentives are very difficult to manage. There are a lot of things going wrong with Diageo in terms of where they're spending their money. If you look at their annual report, you can see actually that they are spending quite a lot of money on things that don't really matter, like inclusion and diversity. As you can see here, they've put a massive thing in their annual. They've got plenty basically written about their diversity and inclusion initiatives, which are important on one level, but at the same time for shareholders really aren't. The other thing I just pick up from the annual report is that they've got a lot of lovely, colourful pictures, but this is a business which has really struggled to grow. So, I mean, this is lovely, and I mean, this is a sort of sales document, but this isn't. Their annual report is not a document which is telling me that this is a high quality business in terms of the long-term growth, although I do accept that it does have a sort of monopolistic position in the spirits market, because a lot of these brands are really widely recognized. But I am frustrated that this is just a sort of the same sort of annual report that you'd see from any other company. This is not a unique company in terms of trying to find some way of really escaping from this historical pattern that they've had of very weak growth, both in terms of the revenue and the net income. So thank you very much for watching this video. This was the first video on my channel. If you enjoyed this video, please do subscribe, please comment. If you disagree with the video, then please also make a comment about that. I'd like to make a lot more videos. Please, if you can suggest companies that you'd like me to cover, that would be fantastic. Thanks for watching. This was, what's the channel called? I've forgotten. This was Investing Matters. Thank you very much, and I will see you in the next video, which will hopefully be very soon. Thanks, and goodbye.